Hey traders, Akil here, and welcome to another episode of The Trading Edge. Wait a minute, sorry, I was supposed to do that a little bit differently. Let's try it one more time. Hey traders, Akil Stokes here, Forex trader, trading coach, real estate investor, entrepreneur, global sex symbol, voted 2017's fourth most helpful trader on Twitter, 19th best trading channel on YouTube, and this is The Trading Edge. All right, just joking, of course, but it's been a flipping fantastic week of trading. I had a great weekend up in New York City. And well, now I've got a little bit of free time for the rest of my weekend. And what better way to spend it than doing what I love, looking at the charts and helping traders become independent, consistently profitable traders. If you guys are new to Trading Edge, is a video that me and my trading partner, Jason Greystone, do each and every day for our Tier 1 trading members. And every once in a while, I want to come on YouTube and give back to you guys as well and show you a few of the opportunities that are on my radar, including some lessons that will help you work through that path of becoming an independent, consistently profitable trader yourself. In today's video, we're going to take a look at two pairs. We're going to take a look at the euro dollar. I'm going to show you an advanced pattern formation. And we're going to follow up on the pound dollar, which is a pair that we talked about last week that followed through fantastically. That's a word. We're going to talk about how you can still take advantage of the shorting opportunity that exists. Also going to give you a little bit of a psychological lesson on the ebbs and flows of trading, dealing with drawdowns, not quitting, and all of that fun stuff that for you serious traders, you need to hear. For you guys that are, well, not serious, you hate to hear it. So hopefully you'll leave by that part. But let's get started with the charts. We're going to look at the euro dollar on the daily chart, just to give you a little bit of a perspective of what's going on. Now, here on the daily, we've recently been in a bullish trend, right? A little trick I like to teach our traders is if price is moving from the bottom left of your corner to the top right of your corner, chances are we are bullish, right? Simplify it. Of course, there are rules on how to read a trend, but the simplest way possible is using common sense. Are we moving from bottom left to top right? If yes, we're going up. If we're moving from top left to bottom right, we're going down. So we're in a bullish trend right here. We've been in a bullish trend. We've recently put in a little bit of a retracement, so a pullback over the last 1, 2, 3, 4, 5 days, essentially the last week. And the pullback is coming into an area which is going to be a kill zone for another potential long opportunity. Now, although we are getting some type of signals that this could be a trend continuation trade, and for you guys that are familiar with divergence, hidden divergence this is why I trade and I don't talk. For you guys that are familiar with hidden divergence, we've got a little bit of that lining up right here. But overall, just based on what I'm seeing on the price chart, and mainly the fact that we refuse to break our previous structure highs on the second test, I'm not too excited about looking for any type of trading opportunity that's going to follow on to the upside. I really want to see some confirmation of that first. However, I am looking to take advantage of a buying opportunity on this pullback, and I'll be looking to trade it more like a counter trend trader. Now, at heart, I am a counter trend trader, so although I do take opportunities that go with the trend, I always approach it in a conservative way, meaning I look to my goal is to get profit from the market into my pocket as quick as possible, move stops to break even so there is no risk. I eliminate all risk. And then if I want to get fancy, shoot for secondary targets after that. Again, it doesn't mean you have to trade that way, but from someone with a counter trend trading philosophy such as myself, that's just the way I prefer to operate. So heading down to the lower time frame, going from the daily chart down to the 4-hour chart, you're going to see two things. And we'll start with the advanced pattern formation. Well, we'll start with this. Just from a structure standpoint, we are retesting the breakout of a bullish pennant pattern. And we had that right here. You can see price action made a high momentum move up on the bullish side. And then we put in this consolidation level, right? So the market kind of churned sideways a little bit before finally breaking up to the upside. We are now, right, we've double topped here. We are now coming back to retest this level. And I would expect there to be some type of buying pressure that exists here. After all, this was a place in the past where the buyers fought off, right? They did not allow the sellers to take control, and they ended up pushing the market higher. I would suspect that that same battle takes place here. And it doesn't necessarily mean that the buyers are going to win, but we should see some type of resistance to the move lower. And by resistance, I don't mean literally resistance. This is a support level, but resistance as far as like some type of fight. I wouldn't expect us to just blow right through this level. We should see some type of retracement here, whether we get enough to make profits or whether it just ends up being kind of a double-headed head and shoulders pattern. But, and this is going to be a perfectly valid structured trade on your own right. But for you guys that are advanced pattern formation traders, you kind of have a built-in excuse to take this aggressively, where we can take the low of our pennant pattern here, and this is going to be our X leg. So this is going to be the starting point for our advanced pattern. And advanced pattern formations, for you guys that are new, they are essentially a series of extensions and retracements that the market puts in. They have to do with a specific, you need a specific Fibonacci sequence within there as well. But it's a series of extensions and retracements that happen in the market that offer some pretty high probability trading opportunities when done correctly. And they typically form when the market is in some type of consolidation. So when there's a fight going on between the bulls and the bears and the bulls and the bears, and the market gets a little choppy, that's where you see those M and those W-shaped pattern formations. This one in specifically is going to be a Gartley formation. It's going to look something like this, right? So we take our initial starting point right here down at 121.66. This initial breakout higher is going to be our X to A leg. Our first retracement down here is going to be our A to B. We then get a retest, right, of our previous structure highs, a retest of that A leg. That's going to be our B to C leg. And then our final move is going to be a decompletion, which is going to complete right down here at about 122.09. Now, we had just missed my orders on Friday. I had my order set at 122, 14, I think? Or 122, I guess we missed it by a little bit more. I thought we had it at, let me just double check that. I thought we just nipped my orders and we missed it. But we may be a little bit off. It doesn't matter. But let's just see. Yeah, I had them about 122.14, so I thought we were traced a little bit lower. Anyway, doesn't matter. Either way, is the pattern formation is still valid here. I might have not updated my my data. It doesn't look like. Yep, there we go. All right, so here we go. Had to switch charts a little bit. For some reason, my data wasn't loaded on my charting platform, but we had tested that 122 again. My orders are at 122.11. We had tested that earlier in the day. We ran off it a little bit. This is a rather large pattern formation, so we didn't run off big enough for me to cancel orders. And then later in that day, we actually came down and got me filled. We came down to spike about 122.06 here. But again, we're not that far off. Currently, price is sitting at 122.50. So if you were to make another type of retracement down, you still have the opportunity to get involved in this pattern formation. Now, the question is, do you want to enter late? And that's going to depend on, well, you as a trader and your risk reward. I personally do not enter trades late. All that does is minimize my potential reward and maximize my potential risk. Well, maybe not minimize and maximize, but it makes my reward smaller. It makes my risk bigger, which is the exact opposite of what I want to do as a trader. I want to make my risk smaller and my reward bigger. But you still may be able to get a one-to-one risk reward out of this trading opportunity. Let's just see. If you're shooting for targets up at about come on, tool, struggling today, 123.33s, right? And let's just say you put stops down at keep that there. Let's just see, if you were to enter at market on the Sunday open, would you be able to get a good risk reward? If you entered right here, you can see that you probably would not. You're going to be below 1-to-1. So you may need to wait to see if price action comes back down to that original area. That way your risk gets smaller, your reward gets bigger, and you're above that 1-to-1 risk reward ratio. So Euro dollar potential advanced pattern formation, technically a completed advanced pattern formation, but there still may be an opportunity here on Sunday or earlier in the week if we decide to push down a little bit lower. Again, these pattern formations, they're going to be valid until the X leg is penetrated. So as long as we stay above 121.64s, right? it's still a valid pattern formation. They don't have to complete exactly at the D point and rally in the opposite direction. The D point is just the completion point. That's where we're looking to get involved. But anywhere in that zone between the D and the X leg is still going to be valid. Now, next, let's head over to the pound dollar. And pound dollar, this is a good follow-up on a trading opportunity we took a look at last week. And it was pretty cool because a lot of our traders took advantage of it. And I'm gonna give you guys a quick lesson on trading psychology. We all know how the market moves, right? The market ebbs and flows. It extends, it pulls back, it extends, it pulls back. Well, the reality of trading is very similar, meaning our equity curves do the same thing. I think it's foolish to think that when you start trading live, you're going to have an equity curve that just goes straight up. I mean, unless you're winning every single trade, it's not going to happen. In reality, you're going to have very, very good results, and then you're going to have some pullbacks, and you're going to have some extensions and some pullbacks, and that's going to be on both a micro and a macro level. And what I mean by that is as a day trader, for example, you're going to have good days, bad days, good days, bad days, good days, bad days. As a longer term trader, you're going to have good weeks, bad weeks, good weeks, bad weeks, good months, bad months, right? No matter how you trade, it's going to be that ebb and flow. Just like any trend, what we're looking to do is we're looking to keep our extension. So the move the higher, right, should be bigger than the moves lower. And that way, you know, you're on the right track. However, that can be very frustrating as a trader because many of us, we have pretty big egos. And I don't necessarily mean that in a negative way. You need a certain type of ego, certain size of ego to be a trader because it's very risky and takes a lot of confidence to do what we do. But some of us come in under the false impressions thinking that we need to win all the time. And if we don't win all the time, we are personally doing something wrong. And that's not always the case. There are going to be stretches where the market you do everything right in the market and it just won't give you what you want. A great example is myself last January, for you guys that followed me, I started off with a 17% drawdown. That means I went here, started the year all excited, all fired up, and boom, slapped in the face. And that's one of the biggest drawdown stretches I've ever taken. Fortunately, after about the first, about 6 weeks, I think around this time, caught a hot streak and the rest of the year was on fire, which was great. This year has been kind of the opposite, right? January and the first week of February was amazing for me and amazing for many of our traders. We have a chat that we have over at Tier 1 Trading where traders are chiming in. It's a great community, a great forum, and we're seeing a lot of the results so we can keep up to date with how they're doing. And a lot of traders saying, oh, awesome week, made this, made that. And then I know personally, the start of this week for me, I took, if I can find it, 1, 2, 3, 4, 5 out of my first 6 trades were losers, right? And I'm coming off that high of last week, then boom, immediate losing streak. Now, I've been around enough to know that this is normal, right? I have a hot streak. The first thing I think is that, hey, Keel, a losing streak is coming. Mentally prepare. Don't do anything dumb to make it worse than it needs to be. But as a newer trader, this can be kind of hard. You have that hot streak, you get excited, your ego starts growing a little bit. You start thinking, yeah, I'm the man. I can't be beat. I've got you, markets. You do what I want. And then all suddenly, boom, smacked in the face and things start going bad. And it's very easy to panic. It's very easy to make a mistake, to sabotage yourself by revenge trading. You know, perhaps you take a loss and immediately you try to get going in the opposite direction to try and make some of it back. Or we had a good example. A trader this week talked about not trading anymore. He said, hey, you know, what if I take this losing streak? Should I just stop trading until the losing is over? And, you know, you don't know when the losing is over until you start winning. So that's another way of sabotaging. The best thing you can do is trade through it. Have trust in yourself, have trust in your plan, and surround yourself with people that are going to give you confidence. And that's what I love so much about the community chat here, where we have a great mix of newer traders and older traders, right? Experienced traders, and of course, trading coaches as well. But sometimes it's good to hear it from someone else. But when you have that newer trader that's on the cusp of struggling psychologically, and you have that experienced trader saying, hey, man, I made this mistake my first year trading, don't do it. Sometimes that little nudge, that little bit of advice is all that trader needs to continue trading, do what they're supposed to do, and hopefully see the results. And by the end of the week, we had some massive moves. I know I made about 500 pips, a 500 pip turnaround later in the week. I know Jason Greystone, I think, went 6 for 6 this week as well. And a lot of traders too. So it was a big confidence boost to see themselves pull out of that losing streak and make new equity highs. And those type of lessons, right? It's not the pips that matter. Those type of lessons are what's going to help you become a successful trader down the road. So the pound dollar is one of those trades that did that. If you guys remember, we talked about the break and close below structure here. We talked about looking for the pullback trade and then extending lower. And, we saw that happen. Now, remember, our zone to go lower is all the way to about $1.37 flat, and even a little bit lower than that. If you guys remember, we took a look at previous structure. Let's go down up to the daily real quick. We looked at previous structure right here. We said that price can easily come down to this level, even a little bit lower, but easily come down to this level, about 136.50s, before we start to run into, basically an area where we want to be cautious about looking for shorting opportunities. And the market here on the 4 hour, going back to the 4 hour, I like to bump up and down the charts. Going back to the 4 hour, right, you can see that we made that move down. We had a pullback. And what you can do is, if you want to give yourself a little bit more confluence, we're not going to have any Fibonacci confluence here. I already tested it, but we can look for, we can ask ourselves, well, if price action creates a one-to-one measured move, aka an AB equals CD pattern, where would that put us? When the market moves harmonically, it likes to make these one-to-one measured moves. And you can see that ABCD pattern is going to put us below, right at that inside level of structure. Where are you at? There you go. That inside level of structure that we noted before. So you can easily make the case that, hey, even if I didn't have a chance to take advantage of the first move, right, that initial break and close, that pullback and the move down, I've still got this much opportunity to take advantage of these markets. And this is easily over 100 pips right now. If we do get some type of pullback in the structure, you've easily got almost 200-300 pips of opportunity. So the opportunity still exists. We don't want to just throw this trade away, guys. We want to keep it on our radar and still have it as one of the main pairs on our radar to watch this week, both from a swing trading and a day trading perspective. So pretty cool stuff. I have one last question for you before we leave. I've been getting a lot of emails about people that have missed the emergence events. We did a big 1 week trading event end of January, and people are hearing about it late, which is fair. We also have traders that are, they want access to the recording. They didn't get the message that after the weekend we were taking it down, and now they're kind of upset. So at our last team meeting, we talked about bringing those training lessons back, but just want to gauge the interest. How many of you guys are actually interested in seeing the recorded footage from that 1 week emergence event? And I don't know how to do a poll here on YouTube, so the best thing I can do is just ask you guys to leave a comment. Say yes if you're interested. Feel free to say no if you're not interested. I'm just going to look at the comments and compare that to who is watching. And obviously, if the majority of people say that, hey, I'm interested in having those free recordings available again, I'll talk to the team and see what we can do. Maybe we can make it like a free membership again, and you get access to that. But just want your guys' feedback. And as always, while you're doing that, hit that like button, hit that subscribe button, share this with a friend. We're trying to build the greatest community of traders here, not just on our Tier 1 trading platform, but on our YouTube as well. Because, well, if it wasn't for you guys, I wouldn't have gotten voted 14th best trading channel on YouTube or 19th best trading channel on YouTube. I wouldn't have gotten voted 4th most helpful trader on Twitter. So you guys are helping me out massively, and I appreciate it, and just keep doing it. The better we grow, the better we become. So until next time, plan your trade your plan. Tier 1 members, we got an awesome Q&A lined up for Monday. We got Anthony and Darren coming in to talk about the Enigma pattern recognition software. You guys just got an update this week, so they're going to talk a little bit about the update, and of course continue to take advice on what you guys want to see. We're building this software out based on what you guys want, so keep that coming, and it just keeps getting awesomer and awesomer. VS1 on the way too. I got the note that they've completed the final test, so I think that VS1 visual structure recognition software may be out soon too. So a lot of good things are coming. And again, it's built by you guys. So come into the Q&A, give your opinion, ask whatever questions you need to ask, and they're going to mold it based on what you guys want. So take care. You guys have a great weekend, and good luck in the markets next week.